Electronic Arts, one of the largest gaming publishers, has agreed to a $55 billion acquisition by the PIF, Silver Lake, and Affinity Partners, making it the second largest deal in gaming history after Microsoft's $75.4 billion acquisition of Activision Blizzard King in 2023. The announcement has been met with surprise, followed by a wave of speculation and commentary on where the company will be heading and how the new ownership may influence the company, their games, and its effects on the gaming industry. Their acquisition is significant. EA commands one of the strongest portfolios in the gaming industry, with flagship titles like Battlefield, Apex, and Madden. Studios have a long legacy with IPs like Mass Effect or The Sims, while EA also sits on a hoard of untouched IPs like Ultima, Wing Commander, and Command and Conquer. It's truly a dragon sitting on a hoard of gold. While many have been surprised by EA's acquisition, I am not. The gaming industry experienced explosive growth prior to the pandemic, but ever since 2022, the consequences of rising development costs ranging from $300 million to $500 million and reaching into the billions for titles like Grand Theft Auto 6 have become apparent. In recent years, the industry has seen a steady wave of acquisitions and consolidations. This movement arguably began with Microsoft's acquisition of Bethesda and ZeniMax in 2021 for $7.5 billion, followed by Embracer's acquisition of Eidos Crystal Dynamics and Square Enix Montreal in 2022 for $300 million. That same year, Sony acquired Bungie for $3.6 billion, and Take-Two acquired Zynga for $12.7 billion. In 2023, Microsoft closed the $75.4 billion acquisition of Activision Blizzard King. Take-Two later acquired Gearbox in 2024 for $460 million, far less than the $1.3 billion Embracer Group paid for in 2020. If not through direct acquisitions, investment has flowed from companies like Tencent and Saudi Arabia's Public Investment Fund. The former holds major stakes in Riot Games, Epic Games, From Software, Larian Studios, and more recently, Ubisoft's new subsidiary, Vantage. The latter owns or holds shares in Savvy Games Group, Embracer Group, Nintendo, Take-Two, and Capcom. Furthermore, there has been the unique case of Saudi Arabia's PIF funding the DLC for Ubisoft's Assassin's Creed Mirage. The industry appears to be in dire need of cash. The industry hasn't been a stranger to layoffs either. Articles of developers becoming jobless has been a regularity since 2022. Between 35,000 and 40,000 jobs have been lost in the video games industry in just 3 years, a consequence of the overexpansion and hiring bloat that characterized the previous decade. Some have suggested that other studios or publishers will follow EA, but I think it is evident from what I have presented so far that EA has been the follower. I think we will see more studios, of those that are left, become acquired or seek investment to secure themselves. Given the financial insecurities of the gaming industry, this raises the question of EA's debt come the closure of the acquisition. Common suggestions have been selling their IPs, AI, and layoffs. Selling EA's IP is a possibility. As noted earlier, the company sits atop a vault of intellectual properties, some of which have remained dormant for decades. Some have suggested that selling these franchises could potentially revive them. While that's possible, I would like to see Ultima return. A key question remains: who would be the audience for these games? Audiences do not materialize spontaneously. Studios must conduct thorough market research to determine whether there is sufficient demand for the type of game they intend to produce. Even with careful planning, there is no guarantee of market engagement. There is also the risk of development overlapping with competing studios, potentially producing similar kinds of games and increasing market competition upon release. For IPs that have been inactive for decades, there must be clear demand and value in reviving them. Given these factors, some of EA's dormant IPs may have depreciated to the point where retaining them could be more advantageous than selling them. On the subject of AI, it could replace part of the workforce. Microsoft is already doing this. Over the summer, articles covered how hundreds of employees at King were replaced by AI-driven processes. The articles mentioned AI was no longer being optional, being integrated across roles and levels, and even factored into individual performance metrics. Some articles noted that AI saved Microsoft approximately $500 million after slashing jobs. So Microsoft is establishing a precedent that AI can both replace developers and reduce costs. Given Microsoft's investment in AI, they have incentive to show its results. EA, for its part, has already incorporated AI into game production, though the extent to which it can further reduce costs remains to be seen. Layoffs are inevitable given the size of EA. They reflect broader industry trends in recent years, especially with major publishers like Ubisoft, Activision, and Take-Two, who doubled their headcount over the past decade, bloating their companies. These reductions are common following acquisitions. Yearly layoffs have since become a recurring pattern within the gaming industry. For instance, EA cut between 300 and 400 positions this past spring. Microsoft laid off 10,000 employees after acquiring Activision Blizzard King, including 2,400 last year and 15,000 so far this year. I'm certain EA will do everything to cut costs in order to service the debt. However, they're already following trends expected of an acquired publisher. What more could they do? Maybe focus on developing good games? Which leads me to BioWare. There has been speculation from both former BioWare developers and commentators that the studio could be censored due to cultural incompatibility with its new owners. As former BioWare executive producer Mike Dara put it, this wouldn't happen, quote, without apocalyptic backlash, end quote. I think it's unlikely given the public investment fund appears to operate similarly to Tencent, investing in properties like SNK while generally remaining hands-off. Developers themselves said they are waiting for the axe to fall. If closure were to occur, it's more likely due to prolonged failure to release commercially successful titles than the new owners. The fact that BioWare still exists at all is remarkable. This was a developer once revered as a legend of the gaming industry, a studio that did more than make RPGs. For many fans, it was the gold standard of Western role-playing games, even standing above Bethesda in terms of quality and innovation. However, today, BioWare is but a hollow shell of its former selves. It's wearing the BioWare skin, but the creative soul left the body long ago. EA's focus is on clearing debt. BioWare could still be profitable. The issue is not the studio's potential. BioWare developed Baldur's Gate, Neverwinter Nights, Star Wars Knights of the Old Republic, Mass Effect, and Dragon Age. The real issue lies in the studio's developers. If closure occurs, it's more likely due to the incompetence of their developers than the new owners. So, in conclusion, I believe the consortium will leave EA in the hands of Andrew Wilson's leadership. They're already following the same trends people suggest this acquisition would bring. These moves are almost inevitable as the company prepares to service its debt and finalize the deal. Whether they succeed or not remains to be seen. Thank you for watching. Please like, comment, and subscribe, and share the video to help support the channel. I hope to see you again soon.